As a beginner trader, I struggled a lot on how I can combine my indicator window, which is the moving average of my indicator window, with the actual moving average of my main chart. This took me a lot of time because I don't know exactly how I can use this. Most of the time you were being told that when price is at the level of 20 and 10 of the RSI, you should buy. And that when price is at the level of 90 and 80, you should sell. You are correct, but at the same time, you are wrong. You are only correct if this is happening in the direction of the trend and it is happening as a pullback. So, whenever it's in the direction of a trend, for instance, in an uptrend, it becomes very easier and effective for it to work this way. But otherwise, you will be doing the obvious. So, in this video, I'll be showing you exactly how you can combine your indicator window using our RSI and our commodity channel index in order to make your entry. So we'll be using this as our additional confirmation tool. Now look at exactly what I was trying to explain. If you look at this now carefully, you realize that price, the CCI line, is at the level of 80 and 90 and is already crossing down. But when you look at the price action on our main chart, the price action keep on pushing higher. The CCI line is already here. So if you are to go by this ideology that this is 90 level, it should sell, CCI is already there. And if you look at our indicator window, you realize that price is buying. Do you see that? It keep pushing to the upside. So what does that mean to us? It simply means that when the indicator is at 90 or is at 10, it's not a criteria to buy, neither is it a criteria to sell. There must be other factors that must be considered. So you don't just trade indicators in isolation. And that is why this video is very, very important for you to watch. So let's look at this scenario. Having established that, the first thing you must do as a trader is whenever you open your trading chart, you make effort to determine the trend of the market. So always ask yourself this question: what is the trend of the market? Once you are able to answer that question of what the trend of the market is, you have done almost 40 to 50% of your assignment. So if the trend is saying sell, it means you'll be looking for opportunity to sell. And if the trend is saying buy, you will be looking for opportunity to buy. Remember, it is the trend that tells you the nature of the market per time, who is dominating. So it is not the indicator. It is not the indicator of abort that will tell you to sell. Neither is it the indicator oversold that is telling you to buy. What we tell you is determined by the trend of the market, because the trend is always your friend. And if you don't want to get burnt, always pay attention to the trend of the market. So in this scenario, we are in a typical uptrend. In our previous video, we have established that for you to connect your trend line, you need 2 points. You need your first point and then your second point, which we could regard it as point A and point B, in order for you to connect your effective trend line. So in this scenario, this is point A and this is point B. So we have our trend line being connected. And I take time to explain one of the major manipulations that happens in the market. For instance, if you look at this, you were expecting price now to retest this indicator, right? In order for you to do what? In order for you to buy. But in this scenario, you see that price break out of that indicator and push all the way to the downside. And Something important I want you to observe is this. Look at this. You can see this crosshair. Look at when price was at that zone. If you look critically, when price was here, you realize that the indicator is already at the level of 10 and 20. So does that mean you should go in for a buy? If you should have bought here, following just indicator because it's at the level of 20 and 10. But look at what price is doing. Price was very much bearish, pulling down with a strong bearish momentum. So what this implies to us is obviously clear that that particular scenario is not enough. Price being here and then look at it is not enough. That's why I said what? Indicator alone overbought is not enough to buy. So what is the right thing to do? Now price has break this trend line. The question is, the fact that price break out of this trend line, does that mean this trend line has been compromised? The answer is no. For this trend line to be compromised or for you to say direction has changed, the previous point where you took your buy trade for, which is this point, price must come down and break it. Price must break this higher low. This your swing low must be broken by price, okay? Because this is a swing high, this is a swing low. So if this trend line, even if price break the trend line, is not enough to say that it has been compromised, let this swing low be taken by the movement of this price. And of course, you see that this price respect this swing low and did not take this swing low. So what is the thing you need to do? All you need to do is very much simple. You pick another trend line and connect it. So I will pick another trend line. You can see now. Beautiful. So you can see here, this is a new trend line. So we'll pick this new trend line and connect this point and this point. So you can see that playing out beautifully well. So after we connect it, what is our next choice of trading? You wait for price to pull back to your trend line. And as price in your trend line, you need to look at your indicator window. So now this is how the indicator comes in. If you look at this carefully, you realize that price is making what? A lower low. And then look at indicator window is doing the opposite. Indicator window is giving us a higher low, while the main chart is giving us a lower low. Indicator window is giving us a higher low. So this is a confirmed indication of divergence. It simply means that there is a divergence that is playing out in this market, and divergence is another effective tool for you to confirm your trade entry. So when you spot that divergence, you need an additional confirmation. You need an engulfing candlestick pattern. So now that you have this divergence, you need this engulfing candle. Look at it. Bullish engulfing candle. Immediately you get that engulfing candle, you now buy. Your stop loss is here, and then you can see how that price plays out beautifully well. Even in this scenario too, you see what price is doing. Indicator is doing the opposite. Here too, this is a divergence situation, and after this divergence, we have this candle that plays out. While this bullish candle, you would have bought, your stop loss is here, and then you see how price pull all the way to the upside. So I believe that we have done a video on divergence on this channel, and it is very important that you go back to watch that video so that you can understand what divergence is and how you can incorporate divergence into trading the strategy, which is the trend line trading strategy. Thank you for watching this video to this time. If you are yet to subscribe to this channel, what are you waiting for? Do well to hit the subscribe button, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you, and see you in the subsequent video.